That's
Yep.
weird. Yeah.
New York Times bestseller, which was surprising to me.
What are like some observations you've had just kind of seeing the fiat currency as we know it in a lot of ways becoming irrelevant?
We had this entire period of like basically free money.
But it's like that seems to be where a lot of it's tied up. And I feel good about knowing that if I'm going to lose it, it's probably a stupid decision I made.
You build stuff to blow it up.
What are some of those different strategies you'll tend to recommend at a high level?
Welcome to Winners, Wallets, and Worldviews, a podcast on business, leadership, and life. Joining us today, we have Addison Wiggin, an American writer, publisher, and filmmaker who's been covering financial markets, the economy, and politics for 3 decades. An acclaimed New York Times best-selling author, his books include The Demise of the Dollar, just released its 3rd edition, covering the dollar from bailouts to the pandemic and beyond. Mr. Wiggins and I talked about a fantastic economy coming up, or is it? We'll have to find out coming up.
Welcome to Winners, Wallets, and Worldviews, the only show that's going to teach you
how to be somebody.
Thank you again. Appreciate your time.
We're going to talk about the story of Cypress Semiconductor called Zero to a Billion.
You're not going to make it. It's not like being a star quarterback.
You guys are all leaders. You guys are trying to crush it.
Ladies and gentlemen, whatever's going on in your life, you're going to run into that block.
Recognize that you're leaving 95% of American business completely behind.
You guys are here learning, getting education.
You're going to run into someone standing there.
No. Michael Jordan's humility is what we're talking about.
Saying to you, you're not good enough to get through to the other side. And I say to you, let's roll, baby. Let's roll.
All right, joining me from Baltimore, we got Addison Wiggin on the podcast, and we're going to talk, I'm really excited, Addison, to just kind of talking a little bit about what you think's coming up in the economy. We see a lot of weird things going on. We've seen a lot of things post-COVID, so I'm really excited to dig into it. But first, I just wanted to ask a little bit about yourself.
Well, I'm Addison Wiggin. I've written a few books. I actually just published a new one, Demise of the Dollar, so I'm going around talking to people about this.
Oh, man.
The 3rd edition of Demise, and the 1st edition actually was a New York Times bestseller, which was surprising to me. But it's really about the fate of fiat currencies historically, but then also what we can expect with the U.S. dollar. And there's a lot packed into that. There's a whole book worth.
Well, yeah, well, honestly, I mean, that's like, I know you've got kind of a long background, as an economist, as a kind of a finance expert in a lot of different ways. But I remember when we were watching the pandemic kind of unfold, and a lot of the stimulus policies were being passed really quickly and in a lot of ways pushed through. And I was like, I'm no mathematician, but we're printing a lot of money that's going into the economy versus how much is existing in the economy. And I remember thinking about that right away when that happened. And I think now we're starting to feel the effects of it. But bring me back to like that pandemic time. What happened? What was going on during this period?
Yeah, it was kind of shocking to me. And the only other time, so just to agree with what you said, I've been doing this for a long time. I've been writing and trying to forecast what's the trends in the economy for about 30 years. And we've seen booms and busts. We saw the tech boom and then the bust of that. Then we saw the housing boom and bust. And then we saw there was a boom that was going on right up until the pandemic. And it was kind of force-fed a bust at that point.
Mm-hmm.
But each time the Fed had been, the chart is just staggering, actually. They raise rates, the economy gets to a certain period. They call it the terminal period of inflation and interest rates, where they kind of coincide, and then the economy busts. We saw that in 2001. We saw it again in 2008. We saw it again in 2018. And what I've been following is just the response that the Fed has every time there's some dislocation in the economy. And in the pandemic, we had a connection, or like the confluence of 2 different trends in the economy at the same time. One, in response to the 2008 housing crisis and the fiasco on Wall Street with the mortgage-backed securities, the Fed had kept interest rates low at zero. We made fun of it as the ZIRP, zero interest rate policy, for a number of years between 2010 and roughly, well, they started raising them in 2016, but they got serious about it in 2018. So we had this entire period of like basically free money. Anybody could just get the money and do whatever they wanted. So we had massive speculation on Wall Street and in things like cryptocurrencies. And there was a whole pot stock bubble. We wrote about that a lot because people were just getting all gung-ho about pot being either legal or medical reasons or whatever.
Which looks like it popped, by the way.
Yeah, it popped, but I mean, that's what happens is all this free money goes into the market and it's got to go somewhere.
Right.
So it goes to these speculative assets. And the way I describe it is that even individual investors, like the people that I write to on a regular basis, became unwitting speculators. They're not investors anymore because they're taking free money and they're trying to chase gains in the stock market. And that's not a normal state of being for the markets. And we had that period of low interest rates for a number of years, long enough for people to believe that that's like the way the market automatically works. You get free money and you get to speculate with it. That's the way the Wall Street bankers thought about it. That's the way that individual investors thought about it. And then we ran into the pandemic. And what happened during the pandemic is they shut the economy down. So there was all that free money that was already like built up. Like I refinanced my own house that I'm speaking to you from right now at 12 points above the lowest ever offered in the history of the United States.
Right.
All this money going into the market. And then the economy got shut down and the government's policy was to send money directly to citizens, which had never happened in the history of our country. It's just a crazy idea that they would do that. So you have this pile of money that's piled on top of low interest rates for a decade. And the result is what we've been dealing with since is just rapid inflation. And then the uncertainty of what the Fed's going to go ahead and do about it. They have to drop rates at some point in order to keep the economy going. But the ironic thing about that is that interest rates now, they're at like 5.25 to 5.5. They're still historically low. And people have been used to low interest rates for so long that that everyone's expecting the Fed to step on the gas again at some point and give away free money again. And we're not going to get to that point and contain inflation anytime soon. So this is like the new normal. People have to get used to higher interest rates. And that really is important for people that are trying to start small businesses. Myself, the project that I'm working on, I started in 2020. As the pandemic shut down the economy, I started doing Zoom calls with all my editors, all the analysts that I knew. And it's been a difficult time to manage expectations if you're a small business owner or an entrepreneur in this environment. I think we're fighting and we're doing a good job, but we're going to have to get used to higher interest rates and a different kind of economy than the one that existed for the decade of the 2010s.
Yeah, it was really an interesting thing. But I'm not an economist by any stretch of the imagination, but when I saw, I think the first stimulus bill was something like $1.5 trillion. And I'm thinking this is going to be inflation when they decided this was going to be printed money. So, and interest rates at that time were something like 2% for a mortgage on your house, right? For a lot of people. Right. And I'm like, well, that's an easy bet, right? So you refinanced your house. I bought a house, and it's like, that seemed to me like a great way to kind of beat this game. And it almost seemed like a speculative way to beat it if you thought that inflation was only going to go up. And it really kind of did, and it hasn't stopped to what we've seen. And I'm just wondering, it's like, why didn't everybody do that? It seems like a pretty easy formula. Print a lot of money, interest rates tend to be low. Why don't you take this free money and use it for your advantage?
Yeah, I think a lot of people, just talking about the housing market itself, a lot of people did do that, and they were locked in at lower rates, and that's why there's a dearth of inventory on the market. So housing prices are going up, even though interest rates are going up at the same time. So that's a phenomenon that
that's weird. Yeah.
It's weird. And we haven't seen it since the early 80s. And the reason for that is that people like myself are locked in at these low rates. And it would have to be a really choice decision to get out of this mortgage and go buy something else. I have a couple other properties that I've already locked in at low rates too. And there's no reason for me to sell them and go, pay a higher rate if I had to leverage myself into another property. I just wouldn't do it. So there's like a very low amount of inventory in the housing market at the same time interest rates are going up. So it's driving prices for properties up. It's like
because of low inventory probably. And
yeah, that's it.
Yeah.
Those almost like a short squeeze in the housing market.
Yeah, it's really a weird thing. And then, so you've got this weird inflation thing going on. You've got this bizarre housing market. At the same time, I'd say in the last 5 years, for sure, we've seen this introduction of cryptocurrency become, more mainstream. And when you talk about all these interesting factors that are kind of mixing in real time, what are like some observations you've had just kind of seeing the fiat currency as we know it in a lot of ways becoming irrelevant?
Yeah, that's a really good question. And I've been working on, so I have a series of books that I'm working on. The Demise of the Dollar just came out, and then I'm working on another one called Financial Reckoning Day. I was actually just working on the cover copy to send over to the publisher right before we started this conversation. But so that one's almost done. And then I have another one called Empire of Debt. And they're in succession, they're analyses of the fiat currency and how we manage our money now. And we have this weird affectation. The dollar is the reserve currency of the world at the same time as it's the payment currency that Americans use. And those two are totally different things, which is an interesting story in and of itself. But fiat currencies in history have never survived. Like in all of history, every time the government starts determining what the value of the money is, it just falls apart. The Financial Reckoning Day, the book I'm working on right now, is a study of booms and busts in the economy and like the impact of interest rates on the economy and how the booms and busts happen is a big chunk of the book. But I do make the observation that anytime there's new innovations that come into the market, it causes speculative booms. Even if the interest rates are not amenable to speculating, it always causes it. And I just look at cryptocurrencies and the track that they've taken. They boomed and they busted, and they boomed and they busted because they are the object of massive speculation in the face of an entire world that's a flood with U.S. dollars, with a fiat currency. And you have like your blockchain evangelists or Bitcoin evangelists who are saying it's the alternatives to the US dollar. It's the only true money. And people get really excited about that and they buy it up. But then the speculators on Wall Street, they sell it. So you have this boom and a bust and boom and bust. And anytime there's a new innovation in the market, we saw it exactly with when we went through the tech boom and bust, when email and websites, they became all the rage, and it went up and it went down. Anytime there's a new innovation like we're seeing, we're currently in the throes of with cryptocurrency, it's very volatile until some kind of price level is determined by the people that are bullish and bearish. Like in my view, cryptocurrency hasn't reached that state where the evangelists think that it's going to replace currency online and it's going to be like the savior of everyone in the face of the fiat currency regime. I don't share that view because I think the innovation itself has not worked its way through the popular imagination yet. And we've seen like Bitcoin went up to 64,000 at one point, and then it was as low as 9,000 a couple months later. Like it's a crazy wild ride. It's worth paying attention to, and if you want to take a swing at it, it's fun to do. But it's not stable enough to replace the currency that we use to buy milk, for example. And the other observation I've made is that the wild speculation that went into cryptos through like 2020 through 2022, there was a massive amount of speculation, and a lot of that was happening on FTX, which ended up going bankrupt. Right, the crypto platform busted. And I actually, in the book that I was just working on, I follow the breadcrumbs all the way back to traders in Hong Kong who were trading in Terra and Luna, which were two stable coins, meaning they were supposed to be locked in step with the US dollar, but they traded outside of the range, and it blew up the algorithms that were running their trading platforms. And what that did was it bankrupted Alameda Research, which is the sister arm, the trading arm of the FTX platform. And then SBF started using FTX's, the money that was in the accounts for people that were using the exchange. He started using that money to patch holes in Alameda Research. And you can follow the breadcrumbs from that event in May of 2022 all the way to the banking crisis in March of 2023. It's really fascinating for me. I've been studying this stuff for 30 years, and here we go. We have a boom and a bust and a cyclical pattern like that really just stabilized the entire financial market right in our face. And it's not over yet, because that trial for SBF doesn't even start until October.
I want to ask you more about that in a second, but I first wanted to ask, when you're looking at cryptocurrency, and I talk to a lot of the crypto evangelists a lot, and I'm a little bit of a skeptic myself, and it seems like the main appeal to cryptocurrency is it's decentralized from the US dollar, and it's independent of the control the Federal Reserve has over it. And I'm just kind of curious on what your view on that is, and what you think, and if you would agree with that is a benefit, if there's other alternatives to serve that same kind of decentralization aspect of it, or if the Fed, does have a legitimate place and we should be, proponents of that.
This episode is brought to you by Magic Mind. Our friends over at Magic Mind have created a unique blend of neurotropics and mushrooms to help with energy production. So the Magic Mind, it's a drink, comes in a little bottle, it's green, it tastes like a green drink, and it's only got about 35 milligrams of caffeine, but I'm telling you, it has unbelievable capability for focus. So the running joke in the office is that people come and they raid my fridge and they take the Magic Mind out of the office because it's really effective. I use it as a pre-workout. I also use it to help me break through an afternoon slump. It's not like coffee or energy drinks that make you jittery. It helps with prolonged focus, especially for really tedious, boring type of work that you might have to do, or those things you just have to get done. So I'm a big fan of Magic Mind. If you guys want to try it out, go over to magicmind.co and use the promo code WINNERS20 to know that we sent you over there. Let us know what you think. Tag us on social media. And without any further ado, welcome back to the show.
I'm not in favor. I think I can answer that in two ways. One is what works, and what is my opinion. That would be two separate things. My opinion is I don't think centralization ever works. It blows up at some point because you're relying too much on the quality and the value of the information that you get in order to make decisions. We watch and write about the Fed all the time because they're evaluating, like Janet Yellen was famous for supposedly introducing the idea that all Fed decisions would be data driven. But data is data, and before it's analyzed, it has to be collected. The Fed only has meetings every 6 weeks. The market changes every minute. So the Fed is just by nature, by virtue of existing,
it's behind. It's going to lag.
It's always late. It's always late, and they always have imperfect information. That's just the nature of the beast. So centralization, I agree with the economist Hayek on this, Frederick Hayek, that information is always wrong when you get it, because like the economy itself is built up of millions of transactions at any given moment. People are buying and selling stuff all day long, every day. And especially with the internet, we sped the entire process up. It's a global market and millions of people are making transactions on a daily basis. So the moment you get any data, it's already old. That's just a fact. And Hayek came up with that observation in like the 1930s when he was analyzing the credit crises that were going on in the Great Depression. It's just faster now. And centralization gets in the way of that because I think human nature is just to look for authorities to kind of like give us guidance and tell us what to do.
It's almost like a shortcut. Yeah.
Like, tell me what to do, tell me what to think. And I know I'm part of this game too, because I think it's kind of fun, is every time the Fed releases their minutes or whatever, like you read through and you pick out actual word changes and stuff like that. Well, they changed the tense on that one verb. It's crazy. It doesn't even make any sense, but that's what the financial world does. And especially this spring, we had the, starting in March of 2023, we had the couple of huge banks, the 3 of the top 5 bank failures ever. And the Fed was raising interest rates. And that's part of the reason why they failed, is they misjudged the risk of rising interest rates. And they collapsed because of that. And then the Fed's still trying to like talk its way through raising rates to fight inflation. That's been the story of the spring of 2023. And like every time Jay Powell opens his mouth, there's literally thousands of people who are analyzing what he has to say. It's like that whole concept that centralized money is, I don't know. So that's my opinion.
Yeah.
I think it's goofy, but that's not what drives markets. And I make this point on purpose because what Jay Powell has to say, what Janet Yellen has to say, what Jamie Dimon at JP Morgan, what he has to say, when they make statements, it does move the market. So there's my opinion that it should, I don't think centralization is an efficient way to run the economy, but at the same time, that's the way it is run right now. And when those people talk and when the data start, when we get employment numbers or we get CPI or whatever, when we get that information, it does move markets. You can actually see it on charts and stuff. So it's worth paying attention to. But that's different than what my opinion is.
Yeah, now, as that relates to things like cryptocurrency, it seems like that's why the crypto evangelists are usually a proponent of crypto, is because it's not necessarily as sensitive to the Fed adjusting rates like the U.S. dollar is, or like a treasury bond might be, or something like that.
Yeah, and I share that view, like that vision. That I've had a lot of people on my own show talking about the efficiency of blockchain and the decentralization of currency as being a better way to establish price structure. And I agree with all of that. It just hasn't happened yet.
Yeah.
Because cryptocurrencies are still the object of speculation. And you have big blow-ups like what happened at FTX. The level of trust that needs to be in the system and continuity between prices from one day to the next. Those things haven't happened yet. I believe that they will at some point, and blockchain's a good innovation that we will be able to take advantage of in the future, but we're not doing that yet. The analogy that I have been using is writing, as we did through the tech boom and bust. There were all kinds of companies that were just blatantly fraudulent, who were tacking .com at the end of their, whatever their name of their company was, just to get the speculative bucks from Wall Street. Those companies went away, but then we were left with the actual innovations that drove everything. And a number of those, like email, that was left over. That's sort of the detritus of the tech bust, right?
Yep.
And then we ended up with a whole system of websites that we can do commerce over, and Zoom. Like, I do almost all of my business by Zoom right now. Like, the innovations that came out of the boom and bust are still important. And I think that the same thing is going to be true of blockchain and cryptocurrencies. On the other side of whatever this is, once the stability is sorted out and it's not the object of speculation anymore, then it'll be an advance that we'll all take advantage of. And most people won't even notice it anymore. Like, we send emails as if, everyone always had email.
Right.
Like, it's hard for people to even conceive of not having email or texts or whatever. But yet, like, I didn't even have my first cell phone until 2008, which is the same year that the iPhone came out. And my first phone was it's not even the company that made it, but it was a flip phone, and I couldn't text or anything like that. Like, I'm historically a late adopter, and but now I can't even imagine living without it, like most people.
Well, I think I totally agree. Like, when a lot of people would talk about crypto and it's cryptocurrency, I'm like, well, the root of it sounds like a currency, and I would be critical of it, and people are like, well, good luck, crossing borders in the future and all these types of benefits. I'm like, well, if you're using like a currency, it's exactly what you say. Why don't you wait for it to stabilize? Like, if I go to Mexico, I convert my US dollar to pesos, I go buy stuff at the local market, and then I convert it back to US dollar when I come home. It seems like that's going to be similar to what happens if you're not treating the currency necessarily as an investment, you're treating it as a currency. And that makes a lot of sense in my mind. I think I agree with you too, or it's just like this kind of sporadic volatility until we kind of becomes extremely like household usage of it,
But I think that that's just natural to innovation. Like, when new ideas are brought or new technologies are brought into the economy, it flares up the imagination. People get excited about it, and then speculators get involved. I think it's just a normal thing. It's boom and bust cycle that the economy always goes through.
Yeah. And there's like these different horses you bet on. I mean, do you remember HD DVDs?
Yeah. Right.
That was like 5 seconds. They had this when DVDs were around for a while, then there was an HD DVD, and Blu-ray came out at the same time. And HD DVD was like, nothing happened with it. It was supposed to be a competitor to Blu-ray, and then Blu-ray took off, and then Blu-ray is not even a thing anymore.
Not very long either.
Yeah, that was around for about 3 minutes, and then now we stream everything online. So it's, I think I agree with you, and it's about, looking forward, betting on which of these firms are going to be the ones that win out. And I think that's always the game. That's why we have all these people on Wall Street playing that game. And I think on that idea, we have a lot of this bizarre market behavior right now. Like, we have, at least what it appears to me, just a stupid, I don't know anything guy that looks at this runaway inflation, and it seems to be causing a lot of bizarre behaviors with different consumers. What do we do about it now? If you're talking to, the normal person, what do I do with my money? Or what things should I be looking for? What's your kind of blanket advice?
Well, when the blanket advice is what I try to do in the books, and then I write a daily email as well. I try to get people just to see what the trends are that are in place, because you could follow even if the premise of the trends is false, they stay in place for a while. I'll just use one that I think is a false trend right now. NVIDIA, who makes the chips for AI, like different AI processors, they just became the 5th $1 trillion market cap company in U.S. history, because everyone's all fired up about AI, but no one actually knows what to do with AI. That's what I think is funny. There's like a huge amount of imagination about what it can be, and it can do some pretty crazy things. But I've been trying to use it while I'm writing. Like, I'm like, oh, what does it mean that the Fed is reaching the terminal rate on interest rates? And it gives me like a paragraph that I could have just found if I just searched, right?
Right. Yeah.
It's
the glorified search engine.
Yeah, which I think is going to be helpful. It's going to make searching for information more efficient, more useful. So I am not, I'm not being a Luddite about it, but I just don't think it's going to be of this world changing thing that everybody thinks it's going to be. But on Wall Street, they just bid up Nvidia. I think the day that they last announced earnings, they went up 240% in one trading session. And so then that also sparks people's imagination, right? It went up 240%. Something's going on over there. It's like the next bright, shiny object.
Yeah.
And then everybody buys it. This past week, though, it started falling. So I have a feeling it's going to come back to earth. But that's the way that people think, is they're looking for that next big boom that's going to happen. And it's actually how people get hurt in the stock market, is they chase the wrong stuff. Instead of looking at long-term investing, they think they're investing when they're buying speculative stocks. And there's a big difference between speculating and investing. Investing is you manage your money through booms and busts. Speculating is you're like, oh, I think this is going to be a boom. Let's go for it. Those are two very different things. So I try to at least make that distinction when people, most of the people I write to they're smart in some part of their lives. They made enough money to worry about it. They could be whatever, entrepreneurs, they could be contractors, they could be build houses, or they could be doctors or lawyers or dentists. They have enough money where they're worried about it. And then they're smart enough to know that giving it to Wall Street is probably not a good idea, and so they're going to lose their money by fees or bad decisions. So then they're like, "Hey, I'm a smart guy. Or a woman. I'm gonna figure out how to do this on my own." And so that's what that's how they end up finding our kind of stuff, because I'm writing directly to those people and saying, "I've been studying this for 30 years, and these booms and busts happen all the time. Don't chase the booms unless you know that you're speculating. If you're going to invest your money, you got to have a good plan, and you have to divide it up among different asset classes: real estate, commodities, tech stocks, income stocks. Like, there's a lot of things you can do with your money." So my blanket answer is you got to learn.
Yeah, I think that's great advice. I mean, if you're going to speculate, to call a spade and say, well, let's allocate this amount to speculation, where I'm okay parting ways with this, perhaps, if it doesn't go the right way.
Yeah. I mean, there are different formulas. Like the traditional formula is 60% stocks, 40% bonds. That's that's what you get in your 401k or whatever. I just recently had a conversation with someone who's adamant about 50% stocks, 40% bonds, and then 30 in real estate or something speculative, and then 10% that you plan to lose. So, if you're okay with losing that 10%, then you could make a lot of money, but it's likely that you're going to lose it.
I'd say I probably put a lot of, if I were to do a pie chart of my net worth, a lot of it is in stuff that I have direct control, at least a lot of control over, like local multifamily properties or my business. And then the money and the resources within my business, my hiring decisions, the revenues that come through that. I don't know if that counts, but it's that seems to be where a lot of it's tied up. And I feel good about knowing that if I'm going to lose it, it's probably a stupid decision I made. Not some guy that's got a fancy degree that's managing my money on Wall Street. And that's just me, but I guess everybody's a little different.
Yeah, I don't know. I've gone back and forth on this a lot with my own money. I'm probably, it'd be accurate to say I follow that 50, 40, 30, 10 idea. If the 10, I just got to write it off before it even happens.
Yeah, that's fun though too, because it's kind of like, oh, we can have a little bit of a little space to play around with, kind of a sandbox environment. But
we're one thing I'm invested in because I just happen to know people who knew the people who founded the Aura ring. Do you know what that is?
No.
It's a
is this like a woo thing,
No, it's a ring You actually wear it on your finger, and it works kind of like an Apple phone, with
Okay.
heartbeat and your sleep patterns and stuff like that. And I just happen to know the people who knew the people who started that, and it has a chance. It hasn't gone public yet, but that I'm just assuming that money's gone.
Yeah. Yeah. And I think, and that's,
I also invested stupidly in a couple different crypto coins, like coins that were being created during like the big craze during 2018, and that money never materialized either.
yeah. So I follow an economist. He comes and does some seminars at our local Chamber of Commerce. His name is Brian Bailu with ITR Economics. He's the CEO, and he had done some different forecasts on what we can expect. And the one thing that stuck out to me that he was forecasting is that there's kind of like he foresees in the 2030s it'll be like a Great Depression type of economy, probably because interest rates on our current debt will exceed what our ability to spend is, and we won't even be able to bring in that kind of tax revenue to cover some of that interest, and it'll cause a massive default that will, send us to the Stone Age kind of thing. And I'm embellishing a lot of what he has to say. Obviously, if you want to follow exactly what he says, it's live. It's in his newsletters as well. But more or less, that was something that stuck out to me. What are your thoughts on that?
Well, I actually produced a documentary called IOUSA, which was I followed David Walker, who at the time was the comptroller general of the country. He was like the top accountant for the government. And he was going around the country on this thing called the Fiscal Wake Up Tour. And I loosely based the narrative of the documentary on a book that we wrote called Empire of Debt, which has a lot of the same themes. Like the larger the debt, the more we have to pay. And when interest rates go up, the servicing of the debt becomes a greater portion, 5% of the national budget year after year, and it goes up and up and up. And I was worried about it in the mid 2000s. We published Empire of Debt in 2006, and then I released the documentary in 2008. And I used all government numbers because I didn't want to come across as an alarmist or like doom and gloom. Like I wasn't pandering to the crowd or anything. I was just talking about what numbers David had put together for the GAO, the Government Accountability Office, which is an oxymoron. But we were using the government's own numbers, which get reported to Congress, and that's what they're supposed to make their decisions on. And our concern at the time that we were making it between 2006 and 2008 was that the national debt, which is different than the deficit, the debt itself would go over $10 trillion. And so we were that was like the big scary number in
That's jump change.
Oh, yeah, we released it in on August 22nd, 2008. And right at that time, it was 9 trillion. And almost to the day, it's 5 weeks later, Lehman Brothers went bust. And then famously, Hank Paulson, who was the Treasury Secretary at the time, walked over with a 3-page dictum that said they were going to bail out Wall Street, right? And he delivered it like close to midnight, right before the fiscal year, September 29th. That's the fiscal end of the government's fiscal year. He delivered it, and they started bailing people out. The number went over 10 trillion before the fiscal year ended. So we, like, the moment we released our film, our numbers were all already outdated. And at the time, we didn't know that Barack Obama would be the president. He was elected that year. And by January 20th of 2009, when he was sworn in, we had already gone over 11 trillion. And then it just went up from there. And like through Barack's whole presidency, it continued to climb. It freaking skyrocketed under Trump. And then we had the pandemic, and, you know, it's just ridiculous. Now it's $32 trillion. It's like, I look back and I'm like, what was I worried about back then? Like, we're just headed over a cliff, and we don't know how to stop it. Like, our political system can't handle the promises that are being made just to get, dumb shits in office.
Yeah. I mean, it's almost like those people that call into Dave Ramsey, and you're just like, how are you going to get out of this situation? But to an average American, like $33 trillion, it's such an abstract, ridiculous number that it just, I don't see how that's a problem. It's just like, they'll do something about it. Like, there's just kind of this like ignorance is bliss attitude about it. What do you even do about it?
Yeah, I don't know. But we did a series roughly at about the same time, but then I've updated it a couple times on the guy that ran the central bank for Zimbabwe. And the only thing they could do about it when they were chasing runaway inflation was like pass government dictates that locked zeros off of the end of the number. So it's 33 trillion. They lop off 3 zeros. It's 330 billion, I guess. I don't even know. I can't even do that math in my head, but that's what that's where this goes. And that's the fault of fiat currency, is that the money, the numbers actually don't mean anything to anyone, especially for a politician who's trying to get some what are your climate change buddies who are making solar panels or something. If you're trying to get them the contract from the government, like, none of the policies actually matter anymore.
Yeah,
that's just what's happening. So that they're just giving away money and printing more when they have to.
Yeah, it's like a chicken or the egg thing. It's like, are we trying to solve problems because people want solutions, or are we just trying to appeal to people that have solutions for things that aren't problems? It's kind of a bizarre political environment. I mean, what do you think about? So one of the things Brian talked about is that Sweden, I think Sweden was one of the only companies they analyzed over the last 800 years that had this level of debt crisis that actually came out of this thing without a major crisis. And the way they got around it was they passed a constitutional amendment to balance the budget, which he's like, do you think we could get bipartisan support to ratify, Congress to pass a spending cap as an amendment? And everyone's like, no. Exactly. That's why I think we're going to crash in 2017.
So this is another case where it's what's happening versus my opinion. My opinion is we should have an amendment to have a cap on spending. And I'll go into the history of the debt ceiling in a second, because I think it's interesting in and of itself. But we should also have term limits, because then the people who are in office for a certain amount of time would have to then become citizens again and live by the laws that they pass. Like, they would have to run. Having, like, our current president has been in Washington his entire adult life. Like, it doesn't make any sense for that person to be running the lives of individuals who are trying to run businesses and raise their families and stuff like that. And the disconnect is unbelievable. But it's here. So my opinion is, yes, we would need an amendment to the Constitution that forced Congress to spend within a certain amount. They would have to balance the budget. And the second thing is term limits would hold people who are our representatives, that would hold their feet to the fire, because they'd have to live by the same laws that they passed while they were in office. But the debt ceiling itself is kind of interesting, because it was instituted prior to the debt ceiling. Congress actually had to justify all of their spending. So the way that they did it was they would come up with all the plans that they wanted to get passed, and they do all their back office dealings and figure out what the budget was going to be. And then they would have to submit it and justify the spending that they were doing, or that they plan to do. So that it would be balanced in the sense that they would have to justify why they were passing the spending for the things that they wanted to, like highways or whatever, or pipelines. But you can't fight a war if you like, because you don't know, you can't fight a war with justifiable expenses because you don't know how expensive, like it really broke down in the 50s and 60s when they were trying to fight wars in Korea and then in Vietnam, and they couldn't figure out how much they were going to spend on those wars because just by nature of a war, you build stuff to blow it up. I mean, that's the only thing, like all the munitions and everything, all of the like roads and stuff that you build are all designed to be destroyed at some point. So you don't know how expensive that is going to be. So they couldn't justify their spending if they wanted politically to fight wars. And then also we adopted the metaphor for the war on poverty, and the war on drugs. And like that idea was central to destroying the idea that Congress would have to justify all of its spending. And that happened in the late 50s through the 60s and into the 70s, and in a very direct way led to the breakdown of the Bretton Woods exchange rate system, where the dollar was tied to gold. The other countries of the world saw the amount of spending that was going on in Congress, and in the U.S. Congress, and they were like, I want to exchange my dollars for gold. And they especially the French, the Germans, and the Japanese, the three of them were exchanging so much of their U.S. dollars for gold that the U.S. was losing all of its gold deposits. And, you know, the old adage that he who owns the gold makes the rules. We were losing our economic advantage in the world. And that's why Nixon took us off the gold standard in 1971. So that whole idea led to the concept that instead of having to justify the spending, we just set a debt ceiling, and then whatever spending, you don't have to justify it anymore. You just can't go above this number. But they instituted the debt ceiling in 1960, and it has been raised 78 times, including this last one. It's like the concept of the debt ceiling, it might be a good one. Like you don't have to justify all the spending. You just don't spend more than this, but they always spend more than that. So they have to have these, you know, the political theater of raising the debt ceiling again, which we just went through and took the eye off of the real problem, which is funding regional banks. We stopped talking about the banking crisis and we started talking about the debt ceiling crisis. And I don't know, it's all of that. If you take my perspective and read the daily headlines, it's like it's just comedy, really. It's like it's absurd to think that we could outspend ourselves forever. Like, who thinks that that's a good idea? But it's the collective decision that allows us to fool ourselves. Like, it's not my fault. We're just going to do that.
Well, it's like the criminal in the in the heist movie. They just think they're just going to keep getting away with it, and I think we've gotten away with it for so long. There hasn't really been at least in the last 100 years, where I think the last of the traditional generation has now. The traditionalists has passed away that were used to burying money in their mattress. A couple folks saw the housing crisis in 2008, but I think we were like so desensitized that, well, it's never been an issue yet. Why would it be? And it's just at some point this is gonna bust, and it's just like when and what do we do to fortify ourselves as we await? Because I'm not necessarily an alarmist, but I'm getting there. I'm getting there.
Well, I find myself in my own, because I've been doing this long enough where I've entered into extreme periods of despair. And I just, what do I do to myself? Like, what? If nobody else is worried about it, why should I worry about it? So I find other activities. But it is... I think just at root, like logically, it's unsustainable. And you don't talk to very many people who don't immediately get it. Like most people know that it's like our spending and the way we run our debt is here is unsustainable. And then you have the people that are like, well, Japan's been doing it for 30 years longer than we have. Well, that doesn't make them any better.
Right. I don't know. I like, I'm not really like a doomsday prepper. I'd say I prepare for the most likely scenario as well as the most dangerous scenario. So for example, I have a house in Florida. I currently am in the process of quoting out solar panels for the roof. Now, I don't really think there's like a serious environmental benefit, but I do think there's a financial benefit, and especially in Southwest Florida. So that to me could produce enough energy for at least me and my family to live off of if we decide to go off the grid entirely. I can put a water filter and I can have water if I need to boil. I live on a channel that goes to the ocean. I could distill my own water. So, I mean, I think of things like that. And then if the world doesn't go to hell, I at least have, a little bit of a break on my energy bill every month. Right. So it's kind of like, I'm constantly thinking in this way. And because I think at least in my lifetime, I'm going to see something like that, like some kind of really bizarre economic depression. And according to Brian, he thinks it'll be in 2030s. And I'm like, that's not that far away.
Well, it comes faster than you think too. Well, I grew up in New Hampshire. My dad was, he was a big fan of popular mechanics.
Mm-hmm.
He devised this house that was, it had a greenhouse on one side that was 2 stories high, and it was built into a hill. So we had like this rotation of air where it would heat up in the greenhouse, and then we had these louvers that you could open and it would travel along to the back, and then it would hit the cement in the back and it would cool down and drop down and then move back into the greenhouse. So there was like a circular rotation of air, and it both heated and cooled the house year round without any other source of electricity.
That's brilliant. Yeah.
And I was like, well, we sold that house when I was like 15 or something. It was just a project of his that, I don't know, they did all this horticulture, like the vegetables that you eat are closest to the house. And then as you go out, it's more like fuel sources. They planned the whole thing. My parents did. And so I grew up with that kind of mentality anyway. So we still have a farm in New Hampshire, and it's heated by wood. There's no other heating source, and it has outbuildings where people can stay and everything. So I think I just grew up that way. It's not like it wasn't really a choice that I made at any given time. And right now I live in Baltimore, still within the city limits, and it's nothing like that.
It's like, but living in the city, you start to get desensitized to how real an issue like that could totally be. Like out in the country, like the sustainable farming model, it's unbelievable how independent a lot of these homesteads are.
Yeah.
And it's like, if you do get in an economic situation, their life really won't change.
Yeah, well, I mean, that is what it is.
Yeah.
What we try to do with the writing that we do and the podcast is help people make decisions on what they can do in their own lives. And that includes investing and also like being careful about where you live and how you spend your money on like real estate and those kinds of things. We have a lot of in the books and also in the newsletters we publish, we have a lot of advice for people who are looking for different ways to invest individually and not worry so much about the institutional investing route, like, IRAs and 401ks and stuff. Most of the people that read our stuff are trying to manage their own money for their own strategic purpose.
Like me, yeah. Let's talk about that for a second. I know we're coming up on time, but if you will, talk to me a little bit about some of those different options to kind of like help differentiate yourself. I know I'm a big proponent of real estate and small business myself, but what are some of those different strategies you'll tend to recommend at a high level?
What I'd like to do, just because it helps me to think about things differently, is I break it down into macro trends, like trends that are in the economy, either in the economy itself. And I study a lot of credit cycles and that kind of thing. in the macro sense. And then on the investment side, we look at income stocks that pay dividends as kind of like a conservative, forward-facing, what we call it long, like you're going to buy it and hold it for a long time and let the dividends pile up. We look at those. I look at precious metals. Those are mostly, well, if you look at gold in particular, it's an insurance policy against some kind of calamity. And
Right. Yep. Exactly. Yeah.
we're looking at this massive pile up of debt that's backing both treasuries and the U.S. dollar, and then geopolitical uncertainty in Ukraine and whatever's going on with China. Those things change from day to day, but we own some gold that is the backdrop in case something just falls apart entirely. Some of the other precious metals are more speculative, like silver is more speculative, platinum is more speculative, but we do kind of look at precious metals as a group to invest in. Are you
buying like ETF backed gold or like physical gold?
Yeah, I mean, I do make the distinction between the physical gold and the paper gold, which is like GLD and those kinds of things.
Exactly. Yeah.
And I think it's worth looking at GLD or the paper, ETFs and stuff that are backed by different precious metals.
So they say.
Yeah, well, yeah, that's the thing, is you don't actually know. You're just trading paper at that point. So as long as you know the difference between owning the physical thing and the paper asset, you can buy and sell the paper asset, and it goes up and down roughly in tandem with the price. Sometimes there's little speculative bubbles that go on, and if you know what the trends are, then you can play those too. So I have nothing against them. But they're just not the same thing.
Yes.
And then we look at tech stocks, because tech stocks are just fun. When people get all excited about, NVIDIA because they're building all the chips for AI and it takes off to the moon, why not? Like, take a little bit of your money and see if you can invest in something that's going to, go 10x or something. I always think those are fun. But I do make that distinction between investing and speculating.
Yeah, no, that's great. Tell me one more time how people can get in touch with you, follow some of your newsletters, read your books.
The easiest thing to do right now is go to www.jointhesessions.com. I do my own podcast, which is called The Wiggin Sessions. And I've been doing this for about 30 years. So what I try to do is get all the people that I know from 30 years of being in the financial investment newsletter publishing industry. And there's a lot of different takes and categories and things that people are recommending for investment. And I try to talk to, I think I've done a couple hundred already. And every person that I talk to has a different take on what's happening globally and how the economy is unfolding. So I use it for my own. I call it my passion project, because I'm interested in to hear what all these people have to say.
Is this the 10% speculative bucket that?
Yeah, right. My own time.
Right.
So it's jointhesessions.com, and when you go there, it's the Wiggin Sessions. And then you, just by virtue of going there, you sign up for the daily missive, which is a daily email that I write. And then I'm in the series of redoing these books, which I'll just hold this one up because I think this is an important one. I want everyone to read the books that we've written before they take our advice, because it's like the bedrock of the investment strategy.
Yeah. NYT bestselling author Addison Wiggin. This has been a real treat to have you just discuss some of this bizarreness, and it's relevant, I'd probably say, in evergreen content, if you will, because this stuff always happens in cycles, and it seems like the advice and I think the topics we've discussed are always going to be relevant depending on whatever kind of financial goals people have. So I really appreciate you jumping on on the podcast.
Yeah, I'll just make a comment about that real quick before we end. I have been going through these books, and I wrote the first edition for the books in between 2001-ish to 2008. I wrote 3 different books, and we produced that documentary that I was talking about. And this is now the 3rd edition of these books that I'm working on, and I'm actually shocked at how accurate the big trends that we identified, 20 years ago are still playing out. And so it's really interesting to me to actually read the words that I wrote, or that my one of my co-authors is Bill Bonner. He wrote. I'm reading it. I'm just like, wow, we actually nailed that. Okay, as I'm updating it, I'm changing tenses, and that's it. Not the idea itself, but just like, instead of saying, "Oh, we expect this to happen," I'm saying, "Oh, this happened." Things that we wrote about 20 years ago. So,
yeah, you keep almost like a track record of all the predictions and see how accurate you lined up. No, that's awesome. Addison, hey, thank you again for the pod. We'll have to do this again sometime, and maybe we'll do a track record update of how well this aged, like a fine wine, maybe.
Yeah, hopefully.
All right. Well, thanks.
Wines too.
What's that?
We recommend wines as well.
Good. What's your what kind of wine are you?
I go back and forth. It really depends on the season, but I'm a big fan of Malbec.
Okay.
And I like Sauvignon Blanc. And most of the ones I've been drinking recently, because it's hot out, are from like the Oregon Willamette Valley region. I like those. And then New Zealand Sauvignon Blancs are pretty good.
Oh, good. Well, maybe we'll have to do this over a glass of wine sometime. Next time I'm in Baltimore, I'll text you.
Yeah, that sounds good.
All right. Thank you, sir, for jumping on.
Thank you for having me.